Hi everybody, Bob Iacchino, co-portfolio manager of the Stock Think Tank, along with the ever elusive Mike Arnold. You'll hear Mike's voice at some point, see his face. We'll do a webinar or a seminar or something where he's involved. He doesn't really like to come out from behind his charts and his spreadsheets, which actually ends up being a good thing for you guys, so maybe we'll keep him there. Anyway, it is December 14th, and I wanted to talk about an old market axiom, an old market cliche that actually ends up being true a lot of the time. And we had a great example of it, not just within the broader market, but within a stock that we recommended that you buy. And that was Pfizer, PFE. And that was last week. We had a recommendation to buy Pfizer somewhere around November 10th or so. We ended up getting long Pfizer November 11th at a price of $38.05. Now, immediately after that, within 2 days, Pfizer announced the amount of their COVID-19 vaccine that they were going to be able to deliver. They halved the estimate of the amount they were going to put out there. That dropped the stock to 35 and change. That was right after we bought it. Our stop was a little bit lower than there. We didn't get stopped out of it, and I'm glad about that because what happened after that was buy the rumor, sell the fact. They were the first in the US at least to get in front of the FDA. And as they got in front of the FDA and it got to be more and more of a positive story from a rumor perspective that the vaccine was going to be approved, the stock started to climb back. Eventually, the FDA revealed over the weekend that their vote had gone Pfizer's way. And that Monday, the stock rallied up. December 8th, we got out of the stock at our target at a full profit of $41.95. It was a large position for us. We bought at $38.05. Sold at $41.95. That was a recommendation you guys got from us. That is how some stocks will go. And as the rumor continued, remember, when they announced that the vote had gone Pfizer's way, they were not approved yet. I have a friend who's a member of the Stock Think Tank, and he and I were talking about the exit of Pfizer, and he said, I don't want to get out of it. Now, this particular guy, successful guy, very successful guy, does not take all of our recommendations. He takes the ones that he likes. And he said he was going to hang on to Pfizer because he was waiting on the actual approval rally. My comments to him were, this is the approval rally. The FDA already said the vote went Pfizer's way. The rally that you're seeing that got us out at our target is the approval rally. He said, no, I talked to this guy, I talked to that guy, it's going a lot higher. Okay, fine. You're an adult and you're a grown man. You're also a smart guy and a very successful guy. Do what you please with your money. Since then, the stock really peaked out in the high 42s, mid 42s, and then has fallen. After the vaccine got officially approved, the stock fell. Today, when the vaccine first got administered in the US to a healthcare provider in Long Island, the very first dose, the stock is now down over 2.25%. Why did that happen? That is exactly buy the rumor, sell the fact. What the market does is it prices in good news. And then when that good news comes out, the valuation is already in the price of the stock. So a lot of these people that bought it anticipating the good news, once they get the good news they expected and the stock doesn't rally much more, they take profits and they move on. In the time that that friend of mine has held his Pfizer, and honestly, I don't know if he's still in it or not, but in the time that he's held his Pfizer stock and it's gone down, he's missed $3 on AMD, actually more than $3, and $2 on Tractor Supply Company, which were also recommendations that we put out in the Stock Think Tank. That's what we try to provide. Now, does that happen in every single example? Of course not. Sometimes we get out of something and it continues. But what I continually try to explain to people is our model is to take portions of a stock's move, take that money, put it in the bank, and then take a portion of what we just put in the bank and apply it to a new stock that has the potential to go higher and potentially go higher faster. Think about it like this. Let's say you have a 15-year-old son and he has a growth spurt and he goes from 5'2" to 5'9" in 1 year. You also have a 12-year-old son who's about 5'1" and hasn't had a growth spurt yet. Who do you think is going to grow more quickly in the coming years? Is it going to be the guy who already went from 5'2" to 5'9"? Or is it going to be the guy who's 5'1" waiting for his or her growth spurt? It's going to be the 5'1". That's what we try to do. We sell the older kid and buy the younger kid. That's what we do with stocks. So it doesn't mean just because we've hit a target that a stock isn't going to keep going in that direction. Just means that our predictive move has happened, and we're happy to take that cash and allocate it to something that has the potential for another move. We've got every single core stock positive as I talk to you right now. We exited Big Lots at a small loss. In the special plays, which a lot of you don't see, we exited Lulu. We got stopped out of Lulu, and it turned out to be an $18 profit. That's something else that happens in our particular model, is the vast majority, not all, but the majority of our stop outs are for less than the original allotted risk, and sometimes they're for a small profit. That's what happened with Lululemon as well. Look, I don't want to go too much into what I think of the overall markets because you've got a monthly newsletter coming out in the next few days, but I just wanted to give you a little sort of a background on buy the rumor, sell the fact. It not only happened in Pfizer, but it's happening in the broader market as the vaccine rolls out. The next thing to look at is the stimulus. The market right now is pricing in $908 billion. If it comes in less than that, we're likely to have a sell-off. If it comes in exactly at that point, we're likely to have a sell-off. Comes in a little bit better, could get a little bit more of a rally. It's just a matter of how big the sell-off is. Pfizer's still a good stock, but we took our money and we allocated it to the kid who was still 5'1" and hadn't had a growth spurt yet. I will talk to you guys next week. I am Bob Icino. Hopefully you guys have a good week.